Forex is the biggest financial market in the world. It is the biggest financial market in the whole world, with a total value of 6.6 trillion traded each and every day. $6.6 trillion traded in the financial markets, in the Forex markets each and every day. That's amazing, right? Yes, that's what it is. And I want you to know that the Forex markets are open 24/7. 24/7. In fact, it's actually 24/5 because we are trading from Monday to Friday. 24 hours. It doesn't close. Unlike other markets like your stock markets, your crypto markets. But the Forex markets is open 24/5. You can trade from Monday to Friday. And then if you want to trade over the weekend, unless if you're trading Bitcoin, then yes, Bitcoin doesn't close. It's open 24/7. But I want you to know that it's very important. Well, welcome to the episode 2 of the Forex from Zero. Yes, you heard that right. You are in the right place. If this is your first time to be on this channel, you are not lost. You are in the right place. In this place, we are teaching only about Forex trading. My name is Leo Kay Forex. I am that guy who's always preaching about Forex trading. They already know who I am. If you don't know, you are not lost. Subscribe to this channel. Press the notification bell and make sure that every time when we come with another content like this, you are there so that you can learn a thing or two about Forex trading, because all we are doing is empowering people to become financial independent, to know what is really happening in the financial markets. What is it that we are trading? What is it that we are busy doing when we say we are Forex traders? And if you can get to know what it is and participate in this Forex trading, trust you me, your finances will never be the same again. Like any other day, today we are continuing with where we left off. In the first episode, we spoke about what is Forex. We spoke about Forex is traded in pairs, and I told you what pairs are and every other thing that I have told you in the first episode. And if this is your first time to be here, I would like to encourage you to go back and watch the first episode. Then you can come and join us so that we may not lose you in the process while we are speaking things that we have already spoken about before, and maybe you won't understand. So it's still early. You can go and watch a 15-minute video that we did on the episode 1. Then you can come and join us here. And you can also share this video with your friends, your family, and anybody that you know who is interested in financials or in Forex trading, so that they may come and get to know what is Forex and what is traded in Forex and how to become a profitable Forex trader. Well, the value of a currency, this is what we're going to be talking about today. The value of a currency is influenced by its political and geopolitical events. It's very important for you to know that. In order for you to be able to buy or sell a currency, you need to know what is happening. You need to know what is happening. But there are 3 things that we use as traders. We've got 3 analysis that we do as traders. There is something called fundamental analysis. There is something called technical analysis. And there is another one that is called sentimental analysis. Now, all these 3 are the 3 major analysis that us as speculators do in order for us to have an edge in the market, to be able to place our trades, whether to buy a currency or to sell a currency. The question is, who trades in the financial markets? Easy. Don't forget to write everything that I'm saying here down so that you can read them and you can get to understand them, because sometimes when you are taking notes, it's easier for you to remember these things, because when you are writing, you are thinking, right? So it will be easier for you to go back and read those things, and it's even easier for you to remember because you have written them down. So I was saying to you, who trades in the financial markets? Number 1, They are big banks. Big banks. So it's your big banks, your big banks, those with with the large pockets, those with deep pockets. Those are the people that moves the market, and those are the people that trade in the financial markets. And number two, it's our central banks and governments. I hope you're writing down these things. It's very important for you to write down. Not writing, it doesn't make you a very clever person, or maybe you think you're very clever, you're gonna get all this information in your head and never forget it. That's why it's very important. Even myself, I know exactly what I was gonna be saying to you today, but I still have my iPad with me. I go back and refer to the information that I'm giving, if it's valid or not. So it is very important for you even as well, so that it's important for you to write down whatever you are learning from this course. Okay, so what were we saying? I said who trades in the financial markets, and I said big banks and large financial institutions. Those are the people with big, deep pockets. Those are the market movers. Those are the people that moves the markets with their monies. All right. Then I say number two is the central banks and the governments, the federal governments of countries. They are also the big people who move the markets with deep pockets. Okay. And then we have large commercial companies. Large commercial companies, they participate as well in the forex markets. For example, maybe it's a company that has branches in the United States, in the UK, and everywhere in the world. When they want to pay salaries of the people that are working for them in different countries, what do? They participate in the financial markets. They change their money, they exchange their money. When they want to buy goods for their companies in different countries, they have to change their money into the currency of whatever country they want to send the money to or buy things from. So the large commercial companies, they participate in the forex markets as well on day-to-day basis. It's very important for you to know that. Then the retail traders, which is us, the speculators. So as retail traders, it is very important and very crucial for you to know who are the big people that are also participating in the financial markets. It is very, very crucial for you to know. So if you don't understand the game, you will lose to those who does. It's quite simple. If you don't understand the game, remember, forex trading, it is a game of probabilities, but you need to develop an edge in order for you to be able to make money in the financial markets. It is very, very important. Now, how do you know whether the market is going to go up or it's going to go down? How do you know a currency pair is going to sell or is going to buy? How do you know? You actually don't. You do not know. As a retail trader, we can't predict with certainty whether the markets are going to go up or they're going to go down. And guess what? We don't have to know it. We don't have to. In order for you to make money in trading, you have to understand that forex trading, it is a game of probabilities. So if you know that forex trading is a game of probabilities, which means every trade outcome is a random. However, we can increase our winning chances by developing an edge. We can increase our winning chances by developing an edge. If you develop an edge in the market, you can increase your winning chances because it is a game of probabilities, like I said. There is no certainty. It is a game of probabilities. So someone will ask me, what is an edge? Well, an edge is your trading strategy that helps you to make more profits than losses. As simple as that. An edge is your trading strategy that helps you to make more profits than losses. And one thing that I want you to know for a fact, losses you will always have. Losses you will always have. You will blow accounts now and again. Even if you know how to trade, even if you are trading for the next 10 years, you will still lose, losing trades. So that we mustn't put it out of the way. It's something that you have to stick at the back of your hand. But your losses must not outweigh your winnings. Meaning your winnings must be more than your losses. So there's something called risk management, but we're going to get to that. We are not there as yet, but we're going to get to the risk management part, whereby you will know how much money you're losing. So when you are losing in a small margin, and when you are winning in big margin. But we are going to get to that as we progress with the course. All right. So an edge is something that separates winners from losers in the financial markets. An edge is something that separates the winners from the losers. So you really need to have an edge in the market. You really have. And it doesn't mean that having an edge, it means that you have a guarantee that every trade that you're going to take, you're going to win. Like I just said, losers, you will always have them. So most beginner traders, they don't have an edge. They don't have an edge. They make some few monies, because of the beginner. There's something called beginner's luck. So they make money from the beginner's luck here and there, but it's not consistent. Why? Because they don't have an edge. So when you have an edge, is just something that puts the odds in your favor. An edge is something that puts the odds in your favor. That's what an edge is. But it's important for you to have a strategy that helps you to make more profits than losses as you trade in the financial markets. It's very important. And the other thing that I need to tell you is that in order for you to develop an edge, you need to master these 3 M's. There is something that we call 3 M's that you need to develop. The first one, I hope you're taking down. The first one is called the method. You need to have a method that you use that helps you to scale up, that helps you to know when to enter and when to exit. It's very important. A method, that's the first M. Then the second M is the mindset. The mindset. You need to have a mindset of a winner. A mindset of a winner. That's the second M. And then the third M is the money management. Money management. In order for you to know that when you're losing, you don't lose so much. You always lose in this margin, and when you're winning, you must make more than what you're losing. Money management. It's like a 3-legged stool. A 3-legged stool, it doesn't function with 2 legs. It have to have all the 3 legs on so that it can sit properly. It's the same in the financial markets. You need to have those 3 M's in order for you to develop a winning edge in the market. The mindset, the method, and the money management. I hope you're taking notes. It's very important. All right, I hope you. Now to currency pairs. It is very important for us also to know that every currency pair is recognized by its unique ISO. Every currency pair, it has its own unique ISO. For example, we have the Great Britain pound. It's called the GBP. GB stands for Great Britain, and then P stands for pound. We also have JPY. JP stands for Japan, and Y stands for the yen, as well as the USD. USD is the ISO, and then the United States is the country, and then the D stands for the dollar. So you need to know, it's very important for you to know that every country is every currency is represented or is known by its own unique ISO. Now, I want you to know that there are 3 types of currencies. There are 3 types three types of currency pairs. The first one being the major currency pair. The second one being the minor currency pair. The third one being the exotic currency pair. You need to know that. It's very important as well. Now, what is the difference? The major currency pairs are those pairs that has a USD in it. Every currency pair that has a United States dollar, whether as a court currency or as a base currency, it is called a major currency. It is very, very important. And then there is minor currencies. These are pairs that include any two of the major currencies except the USD. Now, those are the minor currencies. And then the exotic pairs. Exotic pairs, those are just pairs that consist of a major currency against emerging market. Emerging market like your maybe USD Mexican, I don't know, is it called a Mexican dollar or USD against the Singapore money, or USD against any of those emerging economies. Now, those are exotic pairs, and I would like to urge you to stay away from them because they are not. You cannot trade them. You cannot make money out of them. Really, you need to be a special kind of a person in order for you to be able to extract money from those kind of pairs, which is the exotic pairs. So you need to stay away from them as much as you can. So yeah, that's all about currency pairs. And now we're going to speak about all right. So yeah, now you're gonna ask me, so which pairs do I need to be trading? Which pairs are best for me to trade? Well, I will urge you to stick to only major currency pairs. It's very important for you to know. Stick to major currency pairs. Stick to major currency pairs. Always stick to currency pairs that are major currency pairs. Always, you must stick to major currency pairs. These are your pairs like your Euro USD, GBP USD. This is like your USD JPY, USD CHF, your NZD USD, and your USD CAD. Those are the pairs that I would like you to stick to precisely. Stick to those ones, and on your watch list, at least you must stick to at least 1 to 4 pairs that you can master. Don't trade everything, you end up confused, but also don't stick to one, because sometimes you come to that one and there are no setups and you end up taking random trades that will also lead to you losing money. So at least have 3 to 4 currency pairs on your watch list. 3 to 4 currency pairs on your watch list that you master, that you stick to, that you end up knowing them like the back of your hand. In doing so, you will be able to master them. Okay, so yeah, I think our session for today, I'm gonna have to cut it here. Then tomorrow we're gonna start from we're gonna be talking about the forex language. You need to know the lingo. You need to know how people speak in the market so that you can be able to be part of the people that are trading forex. Because if you don't understand the lingo, then maybe you are in a community, because you're going to have to get into a community of like-minded people, in a community of forex traders, and then there is a certain language that they speak. So in order for you to be able to be part of the traders, you need to know the lingo. So tomorrow we're going to start talking about the lingo and their meanings, things like bearish, bullish, pips, things like that. You need to know them. And we're going to be talking about market sessions. We're going to speak about a number of things. So yeah, just don't forget to subscribe to this channel. Don't forget to turn on the notification bell and to like this video and to share it to your friends and family and everybody that you know is interested in learning about forex trading. And yeah, I just believe and hope that you are learning and you are writing, you are taking notes. And if it happens that you have a question or there's something that I've spoken, I've said, and you didn't understand, you can come to the inbox. You can go to the comment section and ask any question. I will be very glad to answer each and every one of you. And there is a link to my free Telegram channel and to our WhatsApp channel, so you can always be part of this family and learn even more than what we are teaching now. So yeah, I think that's all that we had to talk about. But don't forget to come tomorrow so that you can learn even more. I am not giving maybe everything, but definitely I am giving something. So yeah, thank you very much for watching until thus far. And don't forget to like, subscribe, and turn on the notification bell so that when we come up with another content like this, you will be notified. Till then, keep winning. This is your boy Leo Kay Forex, and I'm out.